A report of potential financial suicide by Chicken Genius Singapore committed by Chicken Genius Singapore has just come out, and let's dive in and let's take a look at what is going on. And I actually really like him, so this is not a critique, this is just my counter arguments to what Chicken Genius Singapore has to say about Tesla stock. He says there's a demand issue. Let's dive deep into the new video that he just released.
Way back here, and I sold some at 1,002. This was before the split. I bought back too early and started to hedge here. I missed out the spike. I also missed the downside. I started to short the stock at this resistance level by selling stock, converting my hedge to a short, and recently closed out for a nice profit. Looking back, my consistent track record of being too early is goddamn annoying.
So I have to give Chicken Genius Singapore full credit. He bought early, he sold at the top, then he got it back in around here with a hedge though, and then he shorted from right here and sold around here. Very nice. Would I do that? Well, I only own Tesla stock. If you are new to this channel, in my stock portfolio, only Tesla stock, nothing else. And shorting is extremely dangerous, and I would highly suggest against that in absolute most case scenarios. There are some exceptions always. I don't stick to just one thing just because that's usually how things work, because you make the most money when you do something that most people don't do, when you break out of regular thinking and rules, which is why I went into Tesla stock back in early 2019, and then the stock went down 50%. And then we all know what happened after that. So I want to give a shout out to Chicken Genius Singapore. You're making money going up, going down with Tesla stock. That deserves all the respect that you can get. Nothing but love from me. Now, I do disagree with a lot of things that Ken in this video said here. So let's go one by one, starting with Tesla's order backlog in units right here that you see. Of course, backlog is shrinking a little bit right now. It's not a crazy difference, and this is during a time when Tesla increased prices something like 42 times in the last few quarters. And yet we see this huge backlog still. And this is Tesla's market share. Ken says it's shrinking as well, and it's not a good thing. Well, if you can't sell your vehicles and someone else comes out with a vehicle and they can sell it to you, get into your hands quickly, the market share is going to shrink. I have people that want to order Teslas, but they look at the delivery time. I'll need to wait for 3 months, 4 months, 5 months, 6 months. Nah, not even considering an electric car at that point. And then they look at some other vehicles if they are available quickly, and that changes their mind. I saw that with my own eyes. So the market share, of course, is going to shrink a little bit. That's a given. And this, keep in mind, Tesla, by far, when it comes to electric vehicles, the kind that they produce, are very highly priced. So you're telling me that it's barely shrinking when Tesla has the highest margins and the prices are going up, and Tesla also has not implemented all of the known ways to reduce costs with gigacasting, with 4680 batteries. Those are not even really used yet. That's going to make a big change in the bottom line.
Total demand destruction. China has a 1 week wait time. You order a Tesla, you get it in 1 week. Where are the new orders coming from? From Europe, China? China's economy is in shit, and Europe is shittier on advertising from a company that says they will not advertise. Supply constraint, can't make enough cars to supply the market. But now they're hiring marketers and cold calling. Why? You think they got nothing better to do? Please just exercise some sort of common sense. Step out of the echo chamber just for a moment.
Okay, so let's do exactly that. Let's exercise some common sense right now, right here. what I am looking at for a Tesla, where the gain is going to come from, is going to be full self-driving. For full self-driving, like, it will dwarf everything that Tesla is going to do with automotive, the margins from selling actual cars. It's just going to look so teeny tiny compared to all the profits from full self-driving. So if you are saying that indeed there is a demand problem, which I don't believe there is, but just for a moment, let's assume there is an actual serious demand issue. Okay. Even in that case, I believe Tesla will sell 10 million vehicles per year by the year 2030, in the year 2030. And when I run profit numbers, not based on current margins, but margins from when they were half of what they are right now, basically, when we look at just the net profit, the returns are still, when I compare S&P 500 and Tesla, still Tesla makes sense even in that case. So that's just with 10 million vehicles delivered in 2030, which is a very low number. Another thing you have to consider very seriously is when you can order a car and get it much sooner, the demand is going to increase a lot more. So as the backlog is coming down, the demand is going to start coming up. And I see that in businesses where, people want to get something, and then we shrink availability of that, and then things start coming in a lot more. And for Tesla also, for pricing, they have so much room for margin, it's a little bit ridiculous. They can easily drop their prices 5%, 10%, even 20%, even more than that, and still be profitable and make money, which would basically put everyone else out of business if Tesla sells cars at break even. So if they really want to go Jeff Bezos mode, like he did with a certain company that sold certain products to products that babies need, they sold that product on Amazon, basically, at a loss until that company went out of business. And Tesla can just sell their product at a break even, and everyone else is going to lose market share and maybe eventually go out of business. So there is that strategy possibly in play if Tesla really needs to do that as well. Also, if there is truly a demand issue, why is Cybertruck not out yet? They could have released Cybertruck out before. I don't think that's an actual technicality or actual production constraint. We just want to make it better still, and we're making it better. But also, the battery that you're going to put into a Cybertruck is going to be so much more bigger than into a Model 3 or a Model Y, but it makes sense to hold that off as much as possible and focus on the maximum amount of deliveries right now, because when full self-driving comes out, we want to have maximum number of vehicles on the road so that we can turn all of them all at once and turn them into robotaxis. And if full self-driving was solved tomorrow, we are not going to have 100 million robotaxis from Tesla tomorrow. It's going to take time to build up. So me seeing that Cybertruck is not out this year tells me there's no actual real demand issue, and it seems to be getting delayed again. So if Tesla, and then on top of that, so Ken is saying that management knows something that we do not know as Tesla shareholders. Well, then why is the $25,000 car not really coming out yet? It's going to be a robotaxi. Why? Because there's no demand issue. That's why. There's too much demand. And Tesla has so much room with Model 3, Model Y, that it's no problem. And then Cybertruck is going to be coming out, and that's going to take the world over. It's going to be quite interesting to watch. Then Chicken Genius Singapore points out that Tesla is hiring some marketing people. This is specifically in Taipei. I'm quite familiar with Taipei. By the way, my wife is from there originally. And my take is, one thing that I have quite a bit of knowledge and experience in is marketing, actually. I am for Tesla doing some marketing. I have nothing against that at all. Just at this particular moment, with demand being so crazy in most places, there's not much of a point because the cars just sell themselves. But with just a little bit of a push, I don't see any issue. So if you have certain pockets in the world where you want to expand a little bit more and you want to give it a little bit of a push, I don't see any problem with that. Not right now, at least. And then you also have to do the math. Is it better to lower the prices, or is it better to increase demand, or is it better to hire someone to do just a tiny little bit of marketing? Because that initial return on your investment from marketing is actually quite a big return if you're not doing any of it. And that perhaps is going to work better than just dropping the price. It's just that Tesla has multiple options, and I don't see a problem in using something that basically every single company on the world uses.
And till now, there's still nobody that can explain to me $18 billion cash, a high free cash flow at a company that grows 50% a year. 50%!
That's actually really easy to explain. How about building new factories? They cost a lot per factory, and Tesla wants to build something like 10 more of those in just the next, 5, 10, 15 years. This is not Tesla, by the way, but I just wanted to show this to you just to see why you need so much cash. This is in Britain, so if Tesla wants to build a factory someplace in the UK, it would be a lot of money. $3.8 billion, sorry, pounds. It's a lot of money. Now, Tesla, of course, can do everything much better and cheaper, but still it's going to be many billions of dollars. And also, right now, everyone freaking out with the economy and S&P 500 already being down more than 20% from its peak. That's making people feel uncomfortable when they look at their financial statements and their investments. And of course, Tesla wants to be on the safer side. I don't think Tesla wants to have any room for bankruptcy, for actual real bankruptcy anymore. And I like that as an investor. That makes me feel really good holding just Tesla stock. If cash reserves were not very high and there was debt, I would not feel as good as I feel right now. Another thing that I would like to point out right here, what Ken is saying, which is an inconsistency in my point of view. So Ken was long for basically 2021, and then his position started changing in 2022. And if you look at the cash, all of the last multiple quarters here, it's very similar. It hasn't changed much. I mean, Tesla is growing like crazy. So in 1 year, basically, it's going to be 50% more deliveries, give or take, just using very rough numbers. Cash is not increasing by 50%. So what do you mean Tesla is holding a lot of cash when the company itself is growing by about 50% approximately, but cash has not grown by 50%. Tesla is using cash very effectively, and they don't have, like, if cash is a problem, then where was that argument right here? Just something to think about.
In cash, I left my smaller positions open. I don't give a shit. Remember, while it feels good to be in an echo chamber, my advice is to have some situation awareness. Don't be cocky. Markets will humble you. Invest safe.
So Ken is no longer short on Tesla, which I think is a smart move. I don't think it was smart to short Tesla even for that tiny little bit of period, but he made money, so full respect there. I would not have done it because of full self-driving. I mean, just watch one of those videos where Tesla does basically the impossible 10 times. Like a year ago, not even a year ago, 7 months ago, 8 months ago, Tesla would be able to do something like this just maybe once, and then you would try to do it again and it just would not work. It would just fail miserably. But now something works incredibly well like this. You got like one time where it crushes it totally, and then you try it again and you think it would not work, but it does. It works over and over and over again. Just watch this video and you will see that Tesla did this crazy turn 10 times. Most of them were in a row. It was like 8 or 9 times in a row. So it doesn't do it every single time, but it does it very often. So we went from 7 months ago, it did this turn, and that was a spectacular achievement, which now this turn is quite easy. And if you look at my channel just earlier, a lot of the titles were failing miserably with FSD crash, which wasn't really a real crash, it just bumped into a pole. And then, for example, Tesla Autopilot sees a bike and tries going through it. Tesla Autopilot works and then fails. You know, that was more of a theme back then. No interventions even if we crash. And compare that to this now, highlights of FSD crushing it. It's hard to find bad highlights where the car just commits to suicide. That doesn't happen much anymore. It still happens, but nowhere near as much, and those are a lot more difficult to find. FSD will 10x Tesla stock, and then you see a background FSD video doing very well. Tesla FSD is now actually useful, so a very different feel when I look at FSD now compared to before. And what if this year Elon Musk actually pulls it off? Even if we give it just a 1 chance out of 100 that this year FSD is going to be as safe as human driving, even if it's that low, do you want to miss out on all those gains that would happen? Because it will happen. So you have to ask yourself this question: do you believe that Tesla will be the first company to solve full self-driving? To me, that answer is absolutely yes. If you do believe that, why would you sell Tesla stock? Because it could be solved at any time. Now, if you don't believe that, then this opens us up to a whole different strategy. If I did not believe in FSD, I would not own any Tesla stock right now. I would be buying in at about 120, 140. And I told my brother earlier this year to buy Tesla stock, which it was at a lower point than it is right now. And then I told him then it went up to, before split, at around $900. That if he does not fully believe in Tesla, you should sell now. Take your profits, run, and then if you want to go back in, really, then if the stock drops down to that 420 before split level, so 120, 140-ish level, now after split, buy back in at that point. But it may never go that low. It may never go that low. But if it does, you will see a lot of red in your portfolio. And if you don't believe fully in Tesla, that is not an easy time to go through. Now, to me, when I see red days, it gets me excited because I got money coming in and I'm buying Tesla stock with that. So I feel pretty happy. But if your retirement is nearby, and if you will need that money very soon, that's a little bit of a different thinking that I would maybe go consider. And then I look at investors and what they say. I actually don't pay much attention to what they say. I just look at what they do. Chicken Genius Singapore right now is no longer short on Tesla. He was for a brief moment, and in that moment, I really went through all of his theses and why he thinks that. And to me, there wasn't really much there because I'm a long-term investor, not a short-term. He tries to time the market. I have full respect for that. That's not what I do. Then I look at Chicken Genius Singapore right now. He has no more short positions on Tesla stock right now. So he's saying that Tesla stock will go down. Well, your money is not on the stock going down. You did go, get out of Tesla, but it doesn't seem to me that Chicken Genius Singapore has this insane deep belief and conviction about full self-driving, which I do. If he does, then I would like to hear his elaboration on that. I would really appreciate what he thinks about full self-driving specifically and the timeline. And does he think that it's possible, even if it's a 1 chance out of 100, is it possible that it will be solved this year or next year? And if it is, why would you be waiting for Tesla to go down to, 120, 140 post split? That seems very risky to me because you might be missing out on huge potential gains there. So pay attention to what investors do. Chicken Gene Singapore did indeed sell Tesla stock, and he doesn't really have any significant position anymore, whether long or short. So that I am listening to, and I'm paying attention to that. But he doesn't have a short anymore. So how strong is his belief that the stock will go down all the way to 120, 140, around 420 before split? I don't think it's very, very high. I don't think so. I think it is quite high, but I don't think it's very, very, very high. So really, FSD here is the biggest thing to think and worry about. That video that I showed you earlier about Tesla repeating that crazy turn 10 times, watch it right here. If you are a Tesla investor and you haven't seen Tesla doing that crazy turn, you have to see it. You really have to see it. I would like to ask Chicken Gene Singapore, have you seen that turn? Tesla doing that turn 10 times. Have you seen it? If you haven't, it's right here. Thank you for watching. My name is Matt Pocius. I'll see you in the next video right here.